I want to talk with the panel today about debundling insurance and specifically the value chain of that. And if you were in the green room earlier, you'd have heard an active and positive debate around not the driver from the car. So we won't be going to that piece. But let me start by introducing the panel. So if I can start on my left-hand side. Steve, do you want to go ahead?
Sure. Steve Long from Bought by Many. So Bought by Many have been on a mission for the last 5 years to really improve the customer experience of buying insurance and the products available. How we do that is using online search data, so what people type into Google, to identify where people are searching for insurance products or insurance product features that don't exist in the market. We then work with insurance partners to create those products, and then we use various methods, including social media, to try and identify people with a similar need and attract them to our site.
Are you rebundling or not, or debundling?
I don't think we set out to unbundle, but I think it's kind of happening.
That's a possible yes. Renaud.
Thanks, Steve. I'm Renaud Mélian, co-founder and CEO of Spixie. Spixie focus on the communication between insurance companies and customer. Basically, it's an automatic communication, more performant than forms, so selling more and increasing the customer satisfaction. We work also on the servicing and claims, mainly with large insurance companies, including Allianz in France and other big names. But now we try to also connect with the existing distribution networks to have larger impacts.
Whoa. Debundling, yes or no?
Sorry?
Are you debundling the industry, the value chain?
Slowly but surely, yes.
Hi, Parul Green. I'm Group Head of M&A and Innovation at AXA UK. And we are health insurance and P&C insurance in UK.
And I can't really ask you if you're going to debundle the value chain.
Well, we're big and ugly enough to do it all.
Very good. Freddie.
Hi, my name is Freddie McNamara. I'm the founder and CEO of Cover. We're on a mission to make insurance fairer, more flexible and more tailored to your actual needs. We have 2 products live that are distributed via a mobile app. The first one allows you to insure yourself to borrow a friend's car for as little as an hour. And the second one allows you to pay a low monthly subscription for your car to sit on the side of the road. And then every time you want to drive it, you just pay a couple of pounds for insurance. That should save infrequent drivers a lot of money. Cheers. Unbundling, clearly.
You are unbundling the value chain. Okay.
And I'm Jared Lee. I am the head of innovation in the UK for a broker called Tiger Risk. We sort of looking at our internal apps, working to answer your last question, sort of facilitate the debundling. So we're building tools that help the players emerge as the debundling occurs.
So this feels like a really unfair fight, and I apologize, Parul, in that 4 people around you are unbundling the value chain, and you're there in the middle holding on to all the pieces. So I guess first question for me is this much ado about nothing? Haven't we always been splitting out the value chain to different parties? Who wants to take it? Freddie, you want to go first?
Yeah, absolutely. So I suppose over the last 50 years, you end up with unbundling and then rebundling and then unbundling and then rebundling, and that's just the course. I think this time around it's slightly different. Over the last sort of 20 years, we've seen sort of financial leverage being brought to bear in order to bundle and unbundle. Now we're moving from the period of financial leverage into the period of operational leverage, and that's powered by technology that's so much more powerful than it even was 5 or 6 years ago. It means you can really go in and granularly analyze these risks. You can granularly work out what each individual should be paying and split apart. I mean, for us, we split motor insurance into seconds of driving. That's just not been possible before in terms of like operational burden. It wouldn't have worked.
So clearly technology is a big driver. We're obviously at an InsurTech conference. Is there anything else that you see, maybe from an incumbent perspective, Parul, that is causing you to hang on tighter to the bits that you've got that people are taking away bit by bit?
So there are economies of scale. So as an insurer, we are under margin pressure all the time. Loss ratios on which we have very little control, but expense ratio we do have control over. And like any evolution of any business, you grow from a small and nimble player, and then you realize there are economies of scale which would make you capture market much quicker, and you try to bundle up. And once you have realized those economies of scale, you tend to stick to it, and your margin then only depletes because of competition. So we are still seeing value in economies of scale and scope that we do have, but we are experimenting. So we are a self-aware organization, and we do experiment with unbundled structures.
So would you have experimented if these guys hadn't turned up and sat beside you?
Yes.
Let's get the tough questions out of the way. So you definitely would have done. You'd have taken it bit by bit and improved the service for customers.
Exactly. We are shareholder owned. If you sit in any of the analyst presentations and hear each part of your P&L being broken down and being questioned on why you're at this percentage, you definitely look at what can I get rid of? How can I make my profits better so that shareholders are in love with me again? So that's always been the case.
So Renaud, what else have you got? So you've got great technology. We all know about Spixie. What else have you got above and beyond the typical incumbent carrier that allows you to move quicker or elsewhere? What differentiates you here?
Basically, it's coming back to the main driver of bundling and unbundling. It's definitely the change in customer behavior. The fact that now, for especially young generations, buying an insurance product is really difficult. Filling a form is just non-attractive, non-engaging, and it's really difficult. Sometimes you can just put the wrong information in it and then have to restart and then just give up. It happened to me. I didn't manage to buy my home insurance, then I got burglared, and it was my fault. But I tried 3 times to buy insurance. So it's clearly important, and this is where at Spixie we really focus on. It's really to provide a technology better than the form to protect people better by asking the right question in a different way to different groups that we are talking to. It's trying to sell insurance to a young professionals or to someone who has a family, 2 kids, and different parts of their life is completely different. And this is where we focused on how to sell first insurance in the right way, engaging way, and an efficient way as well. And then it will come on the product.
So you're saying you're more efficient than a traditional carrier?
Yes.
Okay.
But no, sorry, not an efficient carrier, more efficient than a firm, because then the carrier is using our technology, so it's becoming efficient.
So you're saying you have to work together to unbundle as opposed to compete?
We don't compete at all. Our vision is really, blue sky vision is really to protect as many people as possible. If you take the example of hurricanes, there are plenty of people living in villages who can't buy insurance because there is no broker agency. They don't have maybe a number to call, it's complex. But they all have a smartphone and they could maybe buy insurance quicker and better. And it has to come from the local insurers when they can trust the brand. So it's helping these insurers to penetrate such market and provide their products to a wider part of the population. So clearly collaboration. Okay,
that's important because I don't think everyone on this panel is naturally collaborating. There might be some levels of competition. So Steve, Renaud talked about data briefly. You guys very, very focused on data, very focused on social data. Does that give you a competitive advantage that we couldn't get anywhere else and therefore gives you the ability to unbundle?
I think it definitely has given us an advantage in a few ways. So looking at online search data and social media data, I think we get a lot of insights around customer behavior, what they're looking for, which gives us a bit of an advantage when we're looking at product development. And just to give you an example of how we use social media for product development, last year we decided we were going to create our own Bought by Many branded pet insurance product, which is a slightly different model to normal. Normally we partner with insurers to do this, but we found the incumbent insurers were just too slow to create a product that would cover pets with pre-existing medical conditions, which we could see was really important from the search data. We could see from social media that there was a lot of people getting frustrated they couldn't cover their pet. So we were able to go, okay, there's an opportunity here We engage with our community of pet insurance members, so 120,000 of them. We just posed a simple question. If you were to create your own pet insurance product, what features would it have? We actually had 40,000 people respond to us. Key learning there is don't have a free-form text response field when you're doing something of that nature. But we were able to, through search data, social data, and also that interaction with our communities, we're able to create products that were unique in the market, filled a need, and certainly I think that is a big advantage for us.
I'm going to be quite cynical for myself here, so unlike me. You're just saying you looked at data, you asked your customers, and you gave them a product that they wanted.
Yeah.
So why don't we do that as a traditional insurance organisation?
I have no idea. I was on a call with a Canadian insurer we're working with last week, and at the end of the call I said, this has been such a great call. It really felt like the whole light bulbs went on the conference call that actually, yeah, we need to look at data and create products that the customers are asking for rather than products we think they're asking for. So yeah, it's not rocket science.
Says the doctor next to me. Okay, so we talk about distribution, we talk about going out to consumers or elsewhere. It's had the lion's share of investment, as everyone will have seen. Where else in the value chain, I guess, Jared, if I come to you, I'm going to pass the microphone all the way down. Where else in the value chain can you see obvious opportunities to start to unbundle?
I think there's a couple of things. So we're on the other end of the value chain. As a reinsurance broker, we're looking at the end capital in this industry. So we're looking at debundling is the value in the data to help the underwriting process and improve the efficiencies there. We had an interesting conversation in the back room, but this idea of how much more efficient can you make that process just from the sheer amount of data, more than the traditional 30 questions. So how can the data piece come into play there? But debundling as well on our side from the capital to the underwriters. The underwriting experience, divorcing from the capital, and you're seeing this influx of alternative capital in the reinsurance space. There's a division there, and I think people are handing over their pen a lot of times with startups as well. They're sort of giving the underwriting authority away. So there's the debundling of the underwriting expertise to the capital on the back end of that.
So hang on, are you saying therefore by giving my pen away, I can unbundle the primary carrier?
You can unbundle some of your overhead related to it anyway.
Where else? So come on, where are we looking? If we look at underwriting, we look at claims, we look at product development,
Yeah.
What else should we be looking at?
The way I see the value chain finishing in the next sort of 10 years is I see it segmenting itself a lot more. So you look at the traditional value chain, the massive players tried to do everything at once. And I think there's increasing value to be efficient and to own little sections of that. So I think there's great claims apps that are emerging that can support that process. So instead of going out and internally trying to build out photo apps to make claims and payments processing things, where can all of those sections debundle? So I think even in something as simple and as fundamental as the claims process, debundling in the segmentation of the component pieces of that, whereby under traditional carriers might partner with third-party startups to make that process more efficient and thereby debundling those sub-elements.
So claims is interesting. If I come back to AXA, if I may, because claims is often talked about at the moment of truth in which we engage. Would you unbundle your claims process? Would you give it to someone else?
We do a lot of outsourcing in the claims area, and we use a lot of technology in the claims area, especially in simple claims areas. We know that 80% of our claims are simple claims, and they should not take so much time to resolve, and technology could come in and make a play at solving through computer vision. The loss adjustment costs could be brought down significantly, and it's an area that we are looking at. So I think holding on to elements of value chain where you as incumbent are not adding to efficiency or gaining scale or scope or gaining any kind of control over your customer journey or customer satisfaction is not a valuable exercise for customer or for the owners.
So there's no remaining sacred cows that you would never give away?
Absolutely not. I mean, and I know if you speak to someone else, they will hold on to dogmas of the industry because they'll say, I've been here 30 years and it's never ever happened.
Right.
But in innovation, we tend not to hold on to dogmas and then start eating our hats 5 months later.
So I think people around us and in the audience will have gone to a startup or moved to a startup from an incumbent for that very reason. I've been in the industry 30 years and I can't change the people. We had this debate last night on one of the podcasts. Are people a barrier to this, which are driving the unbundling process in the first place?
Yes, culture is a big barrier to any innovation in any company, and the cultural change is the hardest to do. But if you can't stop innovation because culture is hindering it, you have to do innovation in spite of culture and wait for the culture to change through the innovation, through getting new blood into the company. So it is an existential question for us. How should we change the culture so that it becomes more innovative, or do more innovation and change the culture there?
So if I come back to Renaud and Steve then, because equally you're working with in some instances and competing with in others. Renaud, you're working with. Does working with them cause you challenges when they unbundle and give you pieces of the puzzle to go fix?
Yeah, absolutely. And I became kind of a fan of this topic of collaboration because we saw like various scenarios in the industry. So when you have independent accelerators full of insurance partners, then you try to engage. And if the digital manager is motivated, yet doesn't have any power in terms of spending for pilots or not owning the P&L, then nothing will see the light. And this is where there is like a cultural challenge. I wouldn't say a barrier, but it's a challenge to accommodate. But sometimes when you see accelerators specific for one insurer, really focus on the business, then there is leadership straight from the executive committee or even sometimes CEO, and then you see stuff happening really fast, really quick, because the culture is changing by inspiration of the leadership straight. Then working together, one thing we tend to do, and it's kind of working, is to do more and more workshops in our office when we try to be professional but yet really cool, and then it creates more energy, and it's just put people in front of each other trying to get stuff done from different departments, not only business, innovation, but also sometimes compliance as well. Yeah.
Steve, you got anything?
Yeah, so part of what we do is work with insurers around the world, helping them use search and social data to identify product development opportunities and digital marketing strategies. And what's been really interesting for me is very often the initial contact comes at the chairman or CEO level. They recognize they've got to do something. They engage with us to see how we can help them. We'll get engaged. Everyone's really excited. We'll spend three or 4 months doing a small pilot. And then it comes to here's the recommendations as to what you need to do to take advantage of all this data and insights we've given you. And that's where kind of the anchors just suddenly dig in. It's like, oh, hang on a minute, we've got to change our business model slightly. We've got to do things slightly differently. That's a challenge. And then it really just comes to a halt. So you've got the sort of the CEO chairman level, very supportive. You've got the younger generation that are just really frustrated that they're working in this legacy environment, so they're all excited. And then there's this sort of middle layer of management that just don't seem to quite know how to work with us.
It's funny, as you're talking, I'm looking at the audience and the faces and the smiles are going, yeah, that's us, that's us. I mean, it's just, it seems to be an epidemic. How do we get rid of it?
Yeah, it's really challenging, and it is, some of it is culture, and it is really difficult to change a culture of a big company. You can't do it overnight. We're kind of lucky that we're new to this. We've got new systems that are flexible. We can hire all the right people that are innovative-minded, very, very clearly screened for that type of mentality. So it's very easy for us to move very quickly. In terms of how do you do that in an insurer? I have no idea. It's a really difficult challenge.
I'll go back to an insurer then. So I think they have done it. If you look at AXA and what they're doing with Trove, for example, a number of other companies, you also announced a blockchain flight delay insurance, which is, I think, revolutionary in the industry. Can you tell us more about those and how you've allowed those to get through successfully?
So the Trove, it took a lot of time. From the initial dialogue to Trove launch, it was almost a year, and it and we learned through that exercise because there were too many stakeholders to manage, too many decision makers, and also, as you know, legal and compliance can turn into a cottage industry on something as innovative as on-demand insurance. What? It'll only be on app? No, what will FCA say? We've spoken to FCA. So we have these internal Mitchell and Webb kind of dialogues with compliance where they throw very strange questions and we have to run hoops on them. But on the Ethereum case, it was working as a very focused, small-scale pilot exercise which was run in a business model innovation department called AXA Next. The suggestion for risk itemization as a new business model to investigate was approved by management committee a year ago, and we were staggered how quickly the developers, external developers, actually delivered this from MC approval to actually having something which can go into the market. So I think the lesson for us has been that stakeholder management and reducing the number of stakeholders and decision makers, and not to build consensus around everything. People, if you
Run through the red lights, as our friend Kenny Leach talks about.
Exactly.
Freddie, you touched on it in your opening piece. Is this a moment in time? Is this we can't do it ourselves, let's give it all to someone else and some partners, and then in 5 years' time, 3 years' time, or 10 years' time, we're back into a cyclical, it's all back in-house again?
So we were speaking earlier backstage about this, and I think what we're going to see in insurance is exactly what we saw in the sort of the wider fintech space, where different startups go in and solve different problems that the banks, as the bundle, aren't doing very well. So you've got sort of the TransferWises of this world, international money transfer, and you've got the Monzos of this world, like analytics on your money. And so they went in and they solved these individual problems, but then they realized that they couldn't really make any money unless they solved a load of other problems. So they started to do that, and then the output will look very much like a bank, but every single one of those products and services has been rebuilt from the ground up by the fintech company. So Monzo is going for a banking license. I wouldn't be surprised if Revolut and TransferWise both get a banking license in the future in order to be able to bundle that back up again. We're seeing that we're seeing the beginning of that stage with insurance. So you've got people jumping in very different parts of the value chain and going, right, I think I can solve that bit better. We've got Tractable, who are doing sort of computer vision with claims management. We've got Cover, who are doing sort of stuff around distribution, unbundling the actual product. But actually, in terms of value chain, Cover has actually rebundled various bits of the value chain. At the moment, in the value chain, you've got the search engine, then you've got the price comparison website, and then you've got the software house, then you've got the broker, and then you've got another software house, then you've got the underwriter. And Cover is effectively the software house, the broker, and the price comparison website in one layer, and to some extent Google. Which means that a whole load of that sort of cost structure has been taken out of the process.
Which makes you more efficient and easier to work with.
Exactly.
I'm not doing a sales pitch for Cover here. Folks, we have about 15 minutes left. If you've got a question, I'll come to questions from the audience as well in a few minutes. Jared, should incumbents be worried about this current focus of unbundling, given Freddie's comments just now?
I think yes and no. I think if they look at it as something that will disrupt their entire business model, whereby they don't exist in a few years, the answer is no. But I think they need to be engaging with these sort of technologies and these startups to improve the offerings that they provide. So if the company's not looking to engage and looking to ignore technology and startups full stop, they should be very concerned. But if they look at it as an opportunity to be a first mover and, like AXA's doing, get in front of clients and get in front of customers with improved solutions, it's a huge opportunity. There will be, in the next several years, massive new winners and losers. And I think there will be a shift in sort of the biggest insurers in the world based on who was quick to move and quick to adapt and quick to partner.
And when you say quick to move and adapt, you mean quick to engage the insurtech or tech community in general, and importantly, to Steve's point, talk to the customers.
Yeah, I think the companies looking to find partners early on will do a much better job than companies who see a solution. They look at something like you guys are doing, and they try to build it internally. They get a whole team, and they hire consultants, and they spend millions trying to do this internally, when they're much more efficient and much better off jumping in and partnering with people who they think are doing something very good and using that as a way to grow their business.
So is that about vision, i.e. a short-term vision focusing on my numbers versus a long-term vision focusing on sustainability? If you're the group CEO of a major insurer, and you've got a stock market to go back to, are you focused on my next 90 days or my 3-year plan, or how do you juggle the two together?
Well, that's one of the concerns about this, why this industry doesn't adapt or isn't perceived to adapt as quickly as it should, is you have an executive board who's perceived to be looking at their sort of next quarterly earnings and then run by an executive team looking for their sort of 5 years and then they're out, versus you look at this group of 20-something startups where they're playing a longer game. They're more than happy to chase market share and chase growth in that way because they're playing a much longer game. If I'm running a company, I've only got 3 years left in my tenure, what is my incentive to make a big risk on something or take a big punt on something where if you have a younger generation, you sort of view where can we take this company in the next 15 years, it's a different strategy.
So Renaud, I'll come back to you if I can. Because you're partnering, do you see a win-win or a win-lose here? Is it all good for you and the insurer, or is there a loser in this as well?
It's clearly can be a win-win, but not for everyone. Because it's a question, as usual, like any competitive market, it's a question of time to market. Collaboration, even if you see a lot of insurtech companies here, to my opinion, there is not even enough. And when we see the size of the insurance market, the size of the large incumbent, the smaller ones, and the large brokers network, it needs to have more collaboration to just be quicker in terms of serving the customer and getting some market shares, because the technology can be developed internally. So it's win-win, but not for everyone. Yeah.
And if I come back to Powell again, you mentioned brokers actually, Renaud. What about other lines of business? We've talked a lot about personal commercial lines. What about health or travel or London market? Is there someone here that has more to win and lose or more to gain by unbundling or not?
So I can talk knowledgeably about health because there's a lot of work we're doing in health business. As you know, the UK PMI market with the large NHS is shrinking for the past 7 years, which means we are competing and a very big player in a very shrinking market. So that's not a great place to be. But health issues plague all our customers. So well-being management, chronic disease management is an area of adjacency that we look at. So when we say unbundle, rebundle, we also do pivots to other areas such as well-being, chronic disease management, care coordination, moving from being a pair of claims to partner in health management. So that's what we're looking at. And travel, you've seen the use case of flight delay insurance and unbundling risks, which are covered in travel, into more affordable and getting a bigger set of customer base to come in and introduce them to insurance, just like Zhong'an has, which is a stellar case of microinsurance. My favorite people, 1.5 billion is gone, and the 11 billion company, and all good luck to them.
A pretty impressive story, right?
Yeah.
But different scale.
Yeah.
Any questions from the audience before I move on to my next question? One right at the front, two right at the front. Microphone, shout. I'll repeat the question. So let me repeat the question, and I'll paraphrase it if I may. GDPR hits us next year, May 18. Given one of the requirements is data portability, is that good or bad for the incumbent or not? And is it significant, very significant, or not significant at all? Is that fair? Who wants to go first?
Okay, just like few words on that. And even before GDPR, there is the Insurance Distribution Directive in February 2018. It's I think it's really good for the end customer, first thing, because finally there could be some matching and transparency between the product and the policy, then more transparency and confidence in terms of data. Huge changes for the incumbent, needed to have like the clean tech, and same for the startups. But I would say as a startup, and I mean you can also contribute or maybe correct me if I'm wrong, but on the startup side, building the technology by principles or the privacy by design helps to be already compliant from day one, but for incumbents, I guess, it's not the same story.
I'll come back to Steve now, because Steve, you've got lots of social data, consent, if you're an AXA or a Viva or a traditional carrier that's got lots of entities, how are you going to handle that going into multiple different operating entities?
So I think for us internally, GDPR is not massively scary. If I was an insurer with legacy systems and tons of data, I would be a lot more worried. I think our premise has always been to be transparent to our customers throughout anyway, so not a major issue. I think we're lucky the way we've built our technology that the format the data's in, it's very easy for us to create the file and have that portability. So
bought by many is not on the critical path?
There's some things we need to do for sure, but we're not massively concerned about it like I'm sure some other people in the room are.
Freddie, Jarrett, anything to add to this?
I think it's going to be fine. I think it's important for companies to really look at the data they're holding and really understand whether or not that's something that's going to be delivering value to their customers, which are,
I think in general,
support.
I think if I can add, in general, regulation favours the nimble. So if you're able to act and move quickly, i.e. startups, that's why you have Freddie, Steve and Renaud sitting here going, there's no issues to us, we've built for this in the first place, and we can make a straightforward change. Or if you're a net new carrier in the UK, and a few have come out recently and said, we're good at moving quickly, then it won't be an issue. It's only if you're encumbered by legacy, in which case it's a much bigger challenge.
The cool thing for us is that is the portability of data. So we can tell our customers to go and get the data that other insurance companies hold and give it to us, and we can deliver a better service using that data. And because data is the only barrier to entry to underwriting profitably, I think the big insurers should be really worried about us doing that.
Do you want to respond? Harold.
So GDPR is a big project for AXA across our European entities. And I can't give you a short and glib answer because there's armies of people working through each of the entities' responsibility in case of GDPR, how we're going to deliver data portability, PSD2 kind of company portability of data if the client decides that he or she wants to leave AXA altogether. These are all things that our legacy system and the legacy spaghetti system that we have through major acquisitions we have to sort for. So it is a big deal for us.
So is this something that unbundling can help you with?
So because the delivery is 25th March 2018, I don't think unbundling will help at all.
Very good. And there was another question in the front. So I think I won't repeat the full question. We don't like old people, so Steve, you and I are out, I'm afraid. So tips for younger generations working inside incumbents or taking on entrepreneurship and getting that message to the top of the organization. What's your tips? Where would you like to start?
You're quite lucky to be in London. It's a really good insurance ecosystem, plenty of meetups, and you can see like this event as well. It was created, part of a community, and then grew. The aim is to engage with everyone, and then find projects where you can have an impact at your scale. It could be presentation, inviting some people to talk in your company, or trying to get some people of your company visiting some startups and trying to engage. And then trying to build some business case. But it always starts from people at the beginning, because the culture, if it's not right from the beginning, then...
But how do you get through the middle management that Steve talked about earlier? Do you, when you go to an organization, do you start at the top?
I think you just start with the beginning with people you connect with. Sometimes it could be high people, sometimes not. If you can talk to someone with already some power within the company, yes, it will help, definitely, yeah.
Okay.
But you can't really choose this.
Freddie, your perspective before we come back to AXA?
Quit. Trying to start up. Don't bother trying.
I tell you, I bow my head to anyone that's done that because it's an amazing journey. So that's one great piece of advice.
I think there is an enormous amount of opportunity for the younger generation in this industry, especially in London. We talked earlier today about sort of reverse mentoring schemes that some companies are running, but there's never been a greater opportunity for a 20-something to get in front of the board of a Fortune 500 company. Because insurtech and blockchain and IoT and all these things are buzzwords that the exec are really, really interested in, but fundamentally recognize that they don't understand it enough. So if you get involved with this and just drop a little article, drop a report, or write up a 3-page little white paper around some things that you find interesting, that transcends up the organization quite quickly, and you find yourself with the power to sit in a room with industry executives who've been there doing this for 30 years, and you're the most knowledgeable person in that room on this topic. And historically, for you to have that audience with the C-suite of a major organization, you would have had to have been placing business and doing contracts for a decade or more, 15, 20 years. But now the opportunity exists for a young person to get the audience with that C-suite. And I don't think an opportunity like that has emerged in this industry before. So I think it's actually a massive opportunity.
I think if you ask any of the founders or any of the startups that you'll see over the day, they'll tell you they've had 1,000 no's and maybe 1 yes and 500 maybes, and they are as frustrated as hell with that and the speed at which they operate. Pavel, can I ask you, what's your view from AXA?
So the short answer is resilience, empathy, and experiment. Empathy is very necessary because you have vast permafrost, which has organizational inertia and are risk averse. They were hired for being risk averse. So if you understand their point of view, you don't raise their heckles and explain it in the way that would be more palatable to them. So I think resilience is a wonderful trait. You will hear many no's and many maybes, but carry on because you believe in what you're doing is important for the organization and generally for insured public. So having a conviction, high conviction, resilient, empathy, and experiment.
So I'll add 2 more things to this, because as you're talking, Freddie's sitting next to you going, quit, just get out. And that is an option. There are other ways to do it. For me, if you look around the UK market, whether you're London market, whether you're a broker, whether you're in a traditional carrier, there are plenty of really excited people about this that believe it's happening. You look at the CB Insight stuff about all the exec calls that are going on, it gets asked, to Jared's point, it gets asked day in, day out. And to Pavel's point, there's an old quote that goes along the lines of something like, passion may fuel your fire. Every one of these founders is passionate about what they believe in, but tenacity gets you to your destination. So you've got to just keep going and keep going and keep going. We have time for one more question, and if not, we're going to, okay? One last shout, I'm afraid. Shout louder. So Steve's nodding away here. I'll let you.
Yeah, it's really interesting. We have this conversation internally a little bit, is the fact that we didn't set out to unbundle everything. We just saw an opportunity to use data in a different way and improve the customer experience and the products available. But actually the reality is we can do it all. Certainly not necessarily all at Bought by Many, but the insurtechs could. So it could be a really exciting vision that you get some of the top insurtechs in the different areas just come together in a kind of consortium and
orchestrate the new world.
Yeah.
But without the brand of a 100-year-old organization that people trust.
Yeah, but I think if that happened, and it probably will now, that could be pretty scary if I was an insurer.
Very good. Guys, I'm going to stop it there. I'm finishing bang on time. A quick round of applause for the panel. Thank you very much.